The way to think about it isn't as a bailout, because it isn't a bailout, it's a takeover. So when the government comes in and, quote, helps, they're really setting themselves up to be running the banks and the financial sector. It's, deja vu all over again for those of you who remember how 2008 went. And it goes without saying, or at least it should go without saying, that Judicial Watch, of course, will be front and center in investigating the Biden administration's mishandling, lawlessness, really just contempt for the American taxpayer in the handling of this banking crisis. And Judicial Watch in 2008, I guess it's probably not surprising, but it's outrageous that despite all that money spent to back up the banks and, quote, rescue the financial system, it was Judicial Watch who was doing, again, most of the heavy lifting in investigating what was behind this. How were these decisions being made? What was the legal basis for these decisions? And we found they were making it up as they went along. So, for instance, we had asked for records about the Federal Reserve and how it was operating. It was pretty clear that their decision-making was ad hoc, meaning it was a, quote, case-by-case basis, and they really had no principled way of doling out billions in taxpayer subsidies and backups for the financial sector. And when it came to the so-called bank rescues or bank bailouts in 2008 and 9, we found that they were really more in the line of takeovers. This is really an incredible story. I remember reading in the Wall Street Journal that the bankers said, well, we went in and we weren't given much choice as to whether to take the money or not. And I thought, well, isn't that interesting? Let's learn about that meeting. So we had to sue and sue to get access to these records. And the documents finally came out, and we found the talking points for the meeting by then, who was the Treasury Secretary at the time, or top official at the time? Tim Geithner. He wasn't Treasury Secretary. He was about to become Treasury Secretary shortly thereafter under Obama. But essentially, the big banks were called in to Treasury, and they were told that you need to take this infusion of federal money, and if you don't like it, we're going to tell you you have to take it. And we have the documents, and I think we can post them below. They literally signed little permission slips. I've signed more sophisticated documents for my kids to go on class trips than the documents authorizing billions of dollars in taxpayer cash that these bankers were forced to sign. So that's my way of saying, whenever you hear bailout, think takeover. And I know some are confused. Why is the left all excited about bailing out these banks and providing taxpayer-backed cash and support for these banks? And the way to think about it isn't as a bailout, because it isn't a bailout, it's a takeover. So when the government comes in and, quote, helps, they're really setting themselves up to be running the banks and the financial sector. And in the case of Silicon Valley Bank, it was a bank that should never have gotten the benefits that the Biden administration gave to them, and I'll get into that in a second. But you can tell why the Biden administration was interested in taking it over, because it was a sensitive bank in the sense that it was one of the top banks in the nation. It wasn't the top bank in the nation in terms of size, but a very important bank in terms of providing venture capital for startups. So of course the Biden administration is going to want some of that. And so they came in, and you probably have followed the news close enough to know that typically your deposits at banks are insured by the FDIC up to a limit of $250,000. Well, it turns out that wasn't sufficient for the Silicon Valley Bank. And so the Biden administration just threw those rules out the window and said, oh, we're going to insure all deposits, including the deposits of corporations who know better, who are over the $250,000 limit. And on top of that, we're going to provide backups for all banks in America so they can mitigate their exposure to the bonds that they, practically speaking, have been required to take on by the last bailout and reform. The bonds which are not throwing off enough interest for too many banks in light of their current stresses they're facing. And so they're just going to be converted with your taxpayer support and backing and get all rescued. And if they take the backing, if they take the special loans, they are going to get, you can be sure, additional regulatory restrictions on their activities. And because it's the left, it's going to be more of the ESG, DEI, critical race theory type of regulations that have distracted our financial sector so much as it is. All right. Well, so I was told by someone that that for instance, Silicon Valley Bank, they had all these risk committees, including risk committees on climate action and all these leftist bogeymen out there that are used to justify extracting money from the financial sector and advancing, frankly, the communist agenda. And but I don't think there was probably a risk committee for leaving $450 million in the equivalent of a checking account. Any company who does that, the idea that we would be bailing them out and providing them these special benefits is just outrageous. And who pays for it? They say, "Don't worry, the taxpayer doesn't pay for it." That's a load of garbage, because they're saying we'll get it from fees to other banks. Well, guess who pays the fees? You do. You're the customers. And of course, we know from past experience, sometimes those fees don't match the outlays. So who has to back it up? Taxpayers. So you're bailing out Silicon Valley Bank. And of course, Silicon Valley Bank also is notoriously close to the Chinese Communist Party. Lots of Chinese communist companies have accounts there. They're business partners of the Chinese. So guess what, dear taxpayer? You're bailing out the Chinese Communist government. And it's one thing to bail it out, and sometimes you got to bail out a bank that has businesses in places that you object to. But in this case, there was no systemic risk caused by the Silicon Valley Bank going under. It was a risk that was generated, or a contagion that was generated as a result of these leftist politicians saying the sky was going to fall if their favorite bank in California wasn't taken care of. And the Washington Post had a story the other day, trying to describe how the Bush-Biden administration carefully orchestrated this bailout. And it became clear from the story that the bailout was about a political pressure campaign from Democrat congressmen out of California. So that was the sophisticated political analysis or fiscal analysis that they were bringing to bear on this bank. There was no systemic issue that required this bank to be bailed out, but there was a political need to do it. And so all the rules were thrown out, and just like that, by essentially guaranteeing every deposit in the United States, in every bank, we have a $19 trillion potential liability. $19 trillion. And you can bet that number's not going to be part of the budget discussion this year. $19 trillion. And of course, this game played by the Biden administration has not reassured anyone, nor should it have, because it shows that decisions are political. It shows that the decisions were not based on a fair application of the law and regulations, but as I described earlier, ad hoc decision making. And it shows the emperor has no clothes. So when the government just spends and spends and spends, and it turns out that in order to deal with that excessive spending and the monetary flood of cash, we have to raise interest rates. All those so-called safe bonds these banks were required to take up to show that, quote, they were safe, become a lot less valuable and really quite risky, as the Silicon Valley Bank shutdown showed. And to highlight the political nature of this, I'm going to quote Barney Frank. Now, Barney Frank is the notoriously corrupt former congressman who was instrumental in essentially protecting a lot of the bad government decision-making and encouraging it that led to the 2008 various crises. Notoriously left-wing congressman from Massachusetts. He's no longer there. But he's on the board of the Signature Bank, which was the second other big bank that collapsed after Silicon Valley. And of course, you know, many of us, including me, were noting the irony of this left-wing critic of the banking cashing in after he left office by being on the board of a big bank. But he made the point that he said, well, our bank was fine, and we should have been allowed to open. But his analysis was because we were invested in this cryptocurrency sector. Politically, they didn't like it, and so they saw it as an opportunity, the Biden administration, to shut it down. So you've got this antagonism towards cryptocurrency, and I'm not going to get into the pluses and minuses of the crypto world, but it just highlights these are political decisions that are being made with your money. And our whole economy gets buffeted as a result of this government malregulation and politicized decision making. And I tweeted out the other day, only the government can break an economy. And that's what the Biden administration's attempting to do, in my view. They see an opportunity for further regulation and takeover of our financial sector, and the damage that it does to shareholders, depositors, interest rates, you name it, they don't care. You know, you would think that the left hates inflation, and they don't hate inflation. I mean, to the degree it becomes politically inconvenient, they don't like it, but they don't mind inflation because it makes government spending easier to finance. They don't dislike this, you know, they treat inflation the same way as they treat higher taxes. They want to get the taxes and inflation as high as politically feasible in order to fund their spending schemes. So, you know, that's kind of my, I would say, 3/4 baked analysis of what's going on. Everything you're being told is a lie, in the sense that the Biden administration doesn't know what it's doing. The officials in charge of managing the banking sector are making political decisions, not ones informed, in my view, by a careful reading of the law and respect for taxpayers and those who have investments and deposits in banks across the country. And now our whole economy is put at risk because of this corrupt socialism that's being imposed by the Biden administration, taking advantage of one bank going south to create a crisis that has dramatically increased government control of the private sector. That's how you lose a republic. Crises that those who oppose a Republican form of government use to undermine the Republican form of government. And by that, I mean a constitutional system that's supposed to restrain government, as opposed to a system that allows it to grow unchecked in power over the private sector. Thanks for watching. Don't forget to hit that subscribe button and like our video down below.